It is widely known and accepted that real estate is one of the best asset classes in the world, and that's hard to argue. Over a long-term period, those that choose to invest in real estate will always see long-term growth. Sure, there are some intermittent drops or market corrections or even crashes in some cases, but those are pretty few and far in between. But overall, real estate has always been a safe asset class and also one that has created the most wealth, the most millionaires, and is really the most accessible, especially right here in the United States. No other country in the world allows its citizens to be able to go out and actually pursue private property with having access to the information about that property, being able to potentially make an offer or negotiate on that property, accessing finance where the bank will give you 95% of that asset's value in exchange for your 5%. Like, it's pretty remarkable when you stop to think about it, because most countries have really huge down payment requirements, or they don't even allow the sale of private property without the government interfering in some capacity. So people need to understand, you've got it really good over here. But there are many ways to actually invest in real estate. It's not so linear. Most first-time home buyers go at this, or people that are just getting their feet wet when it comes to real estate, and think, I'm gonna buy a place for me to live in. But that's not for everyone. A lot of people actually like being able to turn things over to the landlord, call him up or her up whenever there's an issue with the toilets or the fridge isn't working. And they just like to write a check, pay their rent, come and go as they please, and not have to worry about anything else. And that's totally fine. Society needs a balance of both renters and owners. If everyone owned, there'd be no renters, and what good would that do? Plus, ownership comes with a lot of responsibility, and people need to really consider that before they actually get into buying real estate, because everything falls on you. At this point, there's no longer that person that you can call to fix things for you. You're gonna have to take care of it. And if you don't, your asset's value starts to decline and you run into other problems. So you have to go about it really carefully. But the purpose of this video today is to share with you and show you different ways to get into real estate that may not involve you having to be so responsible, but still be able to earn a high rate of return and benefit from this amazing asset class right here in the United States. Welcome back, guys, to another YouTube video. My name is Arjun Dhingra. I'm a 24-year mortgage veteran working here in the San Francisco Bay Area. I live here with my wife and two beautiful daughters. I'm a former two-time Taekwondo world champion and coach for Team USA, and it's really my mission to help people make smarter decisions around taking out mortgage debt. So if you are interested in investing in real estate, particularly here in the San Francisco Bay Area, reach out to me anytime on Instagram at Arjun Mortgage. I reply to all my own DMs, and I will certainly get back to you. And anything that you want to learn about or discuss and chat on, I'm here for you. But also, if you could please do me a favor and make sure to like this video, if you do actually like it, and subscribe to my channel so that I can continue to reach you with content like this that's valuable and hopefully helpful to you. So let's get into today's video. So the first way that most people conventionally enter the real estate market is buying a home for them to live in, whether it's a condo or a house. They decide that they're tired of paying rent, or maybe their landlord is evicting them, or they're getting kicked out of their parents' house, or they have a life event, like they're getting married and they want to put down some roots and actually start to invest in their own future. So they take the step and either buy a condo or a home. But as life is changing for people, both professionally and personally, and how they're choosing to spend their money, more and more people are opting for not buying a primary residence. Now, this doesn't mean that they're anti-real estate. They're actually pro-real estate. They're just going about it in different ways, which leads us to the second way in which you can invest in real estate, which is to buy a rental property. This means people are staying either living with their parents or in some type of unique living situation, or they just have a really good rental situation. But they know about the power and understand the tax benefits of owning investment property, and they don't mind being a landlord or outsourcing that to a property manager, so they invest in something that's going to generate them some cash flow, build some long-term equity, and yield them immediate tax benefits on day one. Now, this second example is actually where yours truly came from, because when I first moved to San Francisco 20 plus years ago, I had an amazing rental situation. In fact, I missed this apartment all the time. It was a beautiful junior one-bedroom studio in the marina. All the neighbors in the building became friends, and some of these people I'm still in touch with today. But also, from a tax strategy standpoint, I had a corporate entity that was paying that lease, so the money wasn't really coming out of my pocket. So I had tax benefits from a business standpoint of living in that place, and I didn't really want to live it. So the first place that I purchased, I did so with the intention of turning it into a rental. And it turned out to be a fantastic rental unit for me that I held on to for 10 years. But people are opting for this type of avenue or choice when they don't want the responsibilities of ownership, but they still believe in real estate enough to want to put money into it, or they might actually be okay with taking on all the responsibilities of ownership. They just really love, however, where they live or the cush rental situation they have. Maybe you have a situation with your landlord where you're paying something like $800 a month for a gorgeous 2-bedroom, 2-bath place. That's a little bit crazy and extreme, but you guys get the point that I'm trying to make. And it's just too good to pass up on. Or it's being used for live-work situations like the one that I had. So everyone's got their reasons. But that is the second avenue in which people get involved in real estate. The third way is through syndications. Now, syndications are where you pool your money together with other people's money and a management group or a group of professionals that are very experienced with taking people's money, legally and legitimately, of course, offering them very clear rates of return in exchange for a certain hold period, and they will go out and find deals. Now, the best example of this are syndications that are used to purchase apartment units. Now, apartments are a fantastic way to grow your money in this country. There are immediate tax benefits from doing so. There's huge upside in the value of the property, and it can earn you great quarterly or annual returns in the way of rental income. Grant Cardone and a lot of other real estate tycoons are huge fans of this. In fact, many of them have funds that actually invest in these specific types of property. So for example, you might pool together $50,000 that you had and you were weighing out, do I buy a place for myself? Do I buy a rental property, but I don't want to necessarily be a property manager or a landlord because I'm really busy and I don't feel like taking that call at midnight to come fix a toilet. So I'd rather put my money to work for me over here where I might get 8 to 10 or more % return on my money. And I get to be hands off. I don't have to find the deal. I'm not going to be in charge of fixing toilets or switching out appliances that just break. And my money gets tied up with a group of seasoned pros for a short period of time. I also have some immediate tax benefits because a lot of times through these syndications, the managers of that property and of your money will actually depreciate the properties immediately, which means I can take some of those losses and offset other areas where I might owe taxes on that calendar year. So this is a really good and strategic way to put some money aside and have it grow, where maybe it's not going to go very far for you in an expensive market like San Francisco to buy something, or you just don't want the responsibility of ownership but really want to invest it in something where you're going to have tax benefits and long-term upside. A fourth way of doing this is similar to a syndication but investing into an actual real estate fund. There are many of them here in the Bay Area, some of which I personally invest in as well. Now, these licensed capital partners will take on your money and offer you a rate of return on average of 8 to 9%. So think of it as just locking your money up in a high yield savings account. They take your money and they will use it for either short-term bridge financing, private business use capital, or other types of short-term real estate debt solutions. The great thing about this, again, it's kind of a set it and forget it type of investment. And typically the hold periods are not for as long. You might be only looking at 1 year or 12 months. So it's hard to get a very low risk rate of return that even rivals 8 or 9%, especially when it comes to something that's safe and sound and real, like real estate. No pun intended. Another way that's adjacent to investing in a real estate fund would be to invest in a REIT, which is a real estate investment trust. Now, these are companies that own, operate, and manage income-producing real estate, whether it's commercial or residential. REITs, although they carry some level of risk, can be a pretty safe way to park your money, may not earn you as high of a rate of return as, say, the real estate funds that I described earlier, but these are very popular and can generally be accessed through a wealth advisor that you know and trust. You can also try and seek some of these out yourself. Now, for anyone out there that's looking at investing in real estate, again, if you need resources or contacts for any of the areas that I'm describing here in this video, please reach out to me anytime via Instagram at Arjun Mortgage, and I will be more than happy to put you in contact with my resources, who again, I trust and I know, and in most all cases, I actually personally invest with as well. Lastly, and perhaps most powerful, is the ability to invest in alternative real estate classes such as industrial property. Now, these are going to be done through specific and accredited management groups. And you want to be very careful about who you choose here because experience and track records truly matter. Now, the hold periods for investing with these groups can typically be a little bit longer, like say 3 to 5 years, give or take. But your rates of return could be anywhere between 14 and 18%. So this is huge upside. Now, similar to a syndication, you have to meet certain requirements to be classified as what is referred to as an accredited investor, meaning you meet certain income, liquid, and overall net worth requirements. The money is invested either into a particular deal or a fund that this management group will deploy into an actual deal. They will go out and seek, particularly in recession-proof markets and recession-proof businesses, seek out industrial property where they can add value by turning over the tenants, making improvements to the property, and managing the overall situation. Again, this is a hands-off way because I don't know the first thing about managing an industrial property or how to even source a deal or what to look for in the form of a tenant or how to hit that tenant up for his rent when he's late. We leave that to the management group. But again, finding one with a very good and long, successful track record is difficult, but not impossible. And when you do find these, they are a really popular place to be able to park some money with. Personally, my family is invested in one of these groups, and it's been the highest yielding real estate investment that we've made over the years. Typically, these management groups will pay you out quarterly with a return from the rental income that's coming in based on your percentage of ownership in the deal. And then you're also going to be eligible for the upside or the pop when the place actually sells at a much greater value because, again, the management company added so much value to the deal by putting in a better performing tenant, raising the rents, increasing the overall value and appeal of the property itself. And at the time of an exit, they're almost always on the very right side of the deal with a lot of profit to be able to share back with their investors. These investments also, like syndications, come with tremendous tax advantages that you can use to offset gains or tax exposure that you might have in other areas of your household income. So those are just a few ways in which you can invest in real estate. But it's my hope today that you were able to watch this video and understand that it's not just about buying a home for you to live in. There are all kinds of ways to have access and touch this highly powerful asset class so that you can benefit from all the long-term wealth and tax benefits of it, educate yourself and create more income on a month-to-month basis, and just become savvy at understanding all these different aspects or touch points of real estate in general. I hope you found this video useful. Please, again, if you could subscribe to my channel, it would mean a lot so that I can reach you with more content like this. And like this video if you did enjoy it and find it useful so that we can reach more people like you. Thanks for watching, guys, and I will see you on the next video.